will help guide us through the perils of the season with some handy year-end tax tips. Please welcome.
What an exciting topic and an exigent need.
Oh, yeah.
The power to tax is the power to destroy. That's from Chief Justice John Marshall, 1819, and the case was McCulloch versus Maryland. The state of Maryland devised a tax on banks, but only for out-of-state banks. I guess the people in Maryland didn't like out-of-state banks. How many out-of-state banks were there? One. It was a targeted tax to get this bank out of the state of Maryland. So the Supreme Court took down the law because basically that tax was not to tax, but to destroy the bank. I think we should let our congresspeople know that even today, the power to tax is the power to destroy. I don't think they seem to understand that quite yet.
No.
So what we're going to do, we're going to have some year-end tax tips so that come April 15th, you won't be totally destroyed. You will probably still be destroyed. But you'll be totally destroyed. Now, a couple of ground rules. Number one, we're going to assume that you don't own your own business. Now, if you own your own business, we can get very, very legally creative, but that would take way more than 5 to 7 minutes, so we're not going to go there. Number two, isn't this exciting? Number two, we're going to assume that you do itemize your deductions. You do itemize your deductions. And the theme of this is we want to speed all of our deductions into 2011 instead of 2012. Now we want to do this creatively, we want to do it legally. There's sometimes a thin line between avoidance, which is a very good thing, and evasion, which will land us in Alcatraz without a comb. We don't want to go there. Okay, so those are the assumptions that we're starting with. I have 4 different items. The first one is your medical expenses.
Here, here.
Yeah. Well, I hope you don't have deductible medical expenses. It's a very high threshold. I hope you don't have that many expenses. But you might if you have to pay for your own medical insurance. Medical insurance is very high. So how can we speed up that deduction into 2011? Very simple. All we do is write your January premium in December. Date the check in December, put it in the mail, and voila, you're a cash basis, voila, I love that. You're a cash basis taxpayer, and now you get the deduction, can get you up to the threshold in 2011. So basically you have 13 months of premiums in 1 year. How cool is that, right?
Yeah.
Also, let's say you don't have insurance, but you have a big medical bill because you don't have insurance. You have a big medical bill. Most medical bills tend to be big now, don't they? It's real simple, folks. Just write a check on December 31st and pay your medical bill. Duh, am I a loon? It's a big bill. You can't pay for it. So what can you do? You can charge it on December 31st. Now, our friends at the IRS, and they are our friends, our friends at the IRS tell us that if you charge something, it's just like you paid it. Now, when are you going to really pay that credit card bill? Maybe or maybe like never, right? But as long as you charge it on December 31st, it's just like you paid it that year. So again, it's just speeding up the deduction so you meet the threshold. Good stuff, yeah. But again, I hope you don't have those big medical expenses. So let's go on to the next item, and that would be interest on your home mortgage. Anybody have a home?
Yes.
Okay. Anybody have a mortgage?
Yes.
Raise your hands.
Yes.
2 mortgages? That's when you give up, right? Okay, 2 mortgages. However, usually with your mortgage interest, it's real simple. You get a form from the mortgage company, and whatever that number is, that's what you deduct. But let's get legally creative. Let's avoid taxes. If you pay your mortgage the old-fashioned way, I pay mine electronically, but if you do it the old-fashioned way, you send in a check. What you could do is pay your January payment in December, and then date it in January, and you would actually get the interest portion deductible that year. So you get 13 months of interest deductible this year. So again, it's just speeding up the deduction. Okay? So you get more than what's on the statement from the mortgage company. That's nice, because that's a subtract. Okay? The next one is going to be charitable contributions. Okay, charitable contributions. In the old days, we would just pass around the plate, you'd put in your check, and everything would be done. That is so 20th century. That is so old-fashioned. You still can do that, right? What you could do if you do that, you could write all of your January contribution, if you will, in December and push it up a month. But you're like, you know, I'm on a budget, I can't do that. Nowadays, you can charge a contribution. And some churches and synagogues, I understand, there are little kiosks there where you can just pay your contribution. You can do that, you can charge it, you can do it online. So again, just push your January contribution into December. Novel idea, okay? And then the last item is gonna be your real estate taxes, okay? Now, real estate taxes aren't due until April 1st. April Fool's Day, haha, got you. But if you pay it in November or December, you get 4% or 3% discount. So go ahead and pay it, get your discount. But again, I'm a crazy person, I'm a loon, you don't have the money to pay it. Well, you can even charge your property taxes. There's a fee if you do it, but there is a charge, so it may help you tax-wise to go ahead and pay the fee to charge it. So this has been all about speeding up deductions, even charging things that you normally pay cash for to speed up your deductions. And then what I do, I group all my deductions in one year and then take the standard the next year and then itemize and then take the standard. Very creative. Of course, I'm a very creative person, legally creative person. Okay? Now, you're thinking, look, Blake, that is so technical what you're talking about. How am I going to ever remember this? You're way over my head here. Now, as I was introduced, we were talking about how tax time is scary and creepy, and you might just start screaming. Right. Well, what if there were mice running all over your house? You'd be screaming, right? Medical, interest, charitable, and real estate. I had to buy a vowel for that one. But that spells mice. So just think of all these mice running around your house, and then medical, interest, contributions, and real estate taxes. An easy way to remember speeding up those deductions, just get the deduction this year rather than next year. Okay, I hope that this helps you on April 15th to not be so patriotic, but to also not be destroyed.